Welcome to Farm Your Daily, a field forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, a look at financing in this farm economy with Bret Baldwin of Landis. Then recent harvest impacts on the marketplace with Reese Drenth of the Ground Level Dispatch. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining me on Farm Your Daily, we're going to take a look at financing and farming. And to do so, we have Bret Baldwin with Landis. He is the Director of Credit. And Bret, thank you so much for joining us today. Top topic of the day is going to be this difficult year we're having. Interest rates are always a concern, and the economy is not super great for farmers in particular. So what is the primary topic you are going over with farmers?
I think the primary topic right now is the low prices of commodities and the high prices of inputs at the moment. How are they going to make ends meet with the balance sheet? That's where the financing comes in. The higher interest rates. We at Landis, we can offer really competitive interest rates where they can buy their products now for the crop year of 2026 and not have to pay for those inputs until after they harvest that crop.
Just so we all are on the same baseline, what is the current range in October that folks, I know credit is very dependent and there's many aspects involved. What's the range of interest rates at the moment for a farm business?
A traditional operating line, you're probably getting maybe 7.25 up to 8.25. Kind of traditional operating line at your bank. We're offering anywhere from 0%. Everyone loves free money, right? 0%, all the way up to 6.75. So I think again we have very competitive rates that we can help our farmer base out.
I remember getting my first car at 0%, but that was the only time I've ever gotten a 0% interest loan in my life. Since then, how does that compare historically with your time working in the finance world? Is that normal? 4 years ago, did we have that price or that rate? And 10 years ago, do we have that rate? What's typical?
Yep. So 4 years ago, I can tell you that the rate was roughly around 4 to 4.5%. That's what your traditional operating notes were at. Ever since 4 years, last 2, maybe 3 years, those interest rates crept up all the way up to the 8%, 8.5%. Fortunately, now in the last couple of months, those rates have come down 0.5%. So I think in the future we're going to see those rates come down as well. But yeah, traditionally rates haven't been this high for some period.
With the rates in mind, what is, I guess, the primary barrier from farmers getting credit or getting access to credit during this time? Are debt levels looking better or worse than they have in the past?
I can say that not 100% accuracy on this one, but the debt levels are increasing. Especially when the interest rates have gone up, our input costs are continuing to go up. People are looking to borrow more and more money. Again, that's where we're really having a robust financing option for our customer base to really give them an alternate source of financing outside of their primary lender, which would be their local bank.
And I think all this goes to the main point of making sure farmers are able to stay in business during more difficult economic
Mhm.
times. So when you are offering the potential even of 0% interest, how does that help producers make sure they're able to continue farming despite maybe bad crops or bad prices?
Yeah. So again, we're an alternate source of financing outside of their lender. We're providing them additional tool to help them help cash flow their operation. So if they need that money for, potentially repairs for this harvest right now instead of sinking it into input cost, they can do so. They can apply for financing, get approved, buy their inputs off of it, and use that money elsewhere, invest it if they need to or if they want to. Again, we're just offering them another tool to help cash flow their operation better.
What do the extra tools do to provide? You use the example of maybe fixing up some equipment. Is that typically the direction most folks do with Landis's opportunities there, or are there areas as well that you find important to mention that folks can get help or assistance with?
No, with our financing operation, it's just financing their inputs. So again, it's they buy inputs from Landis, we can finance it on their loan, and then that frees up their cash flow to use it for anything else they need to, whether it be equipment repairs, whether it being paying, farm rent. Maybe they need to, maybe they're wanting to expand their operation and buy, additional ground. That type of deals, investment opportunity. They can use those funds for a plethora of opportunities there.
I think you may have mentioned it in our conversation so far, but I would like to just, I guess, ask the more direct question. You are the director of credit. It's your work. It's what you do at Landis. Why is what you do important for producers? Like I said, I think you've mentioned it a little bit, but why to you is this something that you find important to do?
Yeah. So my background is in agriculture. I love what I do. I've been in ag financing for the last 14, 15 years. W- we want to help the farmer, right? We want to keep that family farm running for a number of years after I'm gone here. Again, giving them the opportunity to finance our operation when it comes to inputs this year to help cash flow their operation better. It's just a tool for us to help that farmer, and we want them to succeed because if they succeed, then that means Landis succeeds as well.
Brett, before I let you go today, what type of resources are available at Landis? I know we covered some of the interest opportunities, but not only what are the resources that you would recommend folks check out, but where could they check them out?
So specifically on financing, if you go to landis.ag/financing, you'll find all our financing information there. You can go to our website, just landis.ag. We have a lot of information around our cooperative, as well as products we offer, as well as grain opportunities. If you're wanting to sell your grain, we have a lot of information out there on our website.
Bret Baldwin is the director of credit with Landis, joining us on Farm Here Daily. Brett, thank you so much for your time today. I really appreciate it.
Thank you so much for having me.
This is Farm Here Daily. We will have another conversation on the way, but first, let's take a quick look at the marketplace. And there was some green in grains. December corn 2.25 cents higher at 4.22, with November soybeans 7.5 cents more at 10.29.5. Soybean meal in December $1.10 a ton in the green at $278 even. Soybean oil about half a penny more at 51.48 a pound. December wheat half a penny stronger at 5.07 and a quarter, with hard red winter wheat in December a penny and a quarter up at 4.93 and a quarter. As for the livestock market close for Wednesday, December live cattle up $1.15 a hundredweight, $238.87, with November feeder cattle $4.57 a hundredweight more at $368.82. Lean hogs in December is 7 cents a hundredweight in the red at $86.10 a hundredweight. That is the Wednesday market close. This is Farm Here Daily. And joining me on Farm Here Daily, we're going to be chatting with Reese Drenth of the Ground Level Dispatch about some of the market trends that have been going on. Reese, so glad to have you back on the program. And let's take a look at some of the trends in the soybean sector, because that has been a concern for the past month, especially with the lack of Chinese buying. What has been the update? Why have we seen a little bit of an uptick over the last couple days?
Yeah, thanks for having us. Always a pleasure. Soybeans have performed pretty nicely in the last 7 days. So we saw some local lows here on October 1st and the November 25 contract down to about 9.94, and now we've gone as high as 10.30. So almost a 40-cent rally here in 7 days, which has kind of been happening quietly behind the scenes. But yeah, soybeans are obviously on the forefront of everybody's minds. If you watch the news, you listen to podcasts, do whatever, soybeans have certainly been in the headline cycle. Lots of farmers going on NBC, CNBC, CBS, Fox News, CNN, you name it, talking about, lack of Chinese soybean demand and, how that's impacting their pocketbooks. So yeah, front and center of the conversation. Nice to see some improvement in prices here in the meantime. But why have soybeans been rallying? Well, a couple different things. Pretty much since the government shut down, soybeans have been rallying. And if you put your tinfoil hat on for a second, you could say that, well, now that the government shut down, obviously we don't have a lot of visibility into reporting in two separate things, right? We cannot see, first of all, export sale announcements or export sales data. That stuff doesn't come out while the government shut down. We also don't see fund positioning via the CFTC reporting commitment of traders on Friday afternoons. And so, again, if you put your tinfoil hat on, people will say, well, China's buying beans because nobody can see they're buying beans because they don't have visibility, and the funds are buying beans also because nobody has visibility. It's just the perfect scenario. And we don't necessarily think those two things are happening, and if they are, they're probably not happening in a great in a big way that might impact prices very, very significantly. But we attribute this rally in soybeans more so to, kind of a lack of yield as we tail off on bean harvest here. We'll say that like bean yields have been better than expected pretty much across the board, except for like the far east in Ohio and maybe some spots in North Dakota. But the dryness of the soybean crop, right, especially in the last couple of weeks where, the hammer has been squarely down, beans are coming into town at 7-8% moisture instead of, 11 to 13% moisture. And that's real bushels to the acre loss as far as, the national average is concerned. And we saw that last year. And we saw USDA account for that last year too. And, we'd expect whenever the government gets back open for USDA to account for some of that also, because it's physical yield being lost. So we attribute some of the price action to that. We also attribute some of the price action to there probably has been some export activity. And we also, with bean harvest winding down, we've watched processors across the Midwest, not necessarily here in central Iowa, but places like Illinois, Indiana, the Dakotas, Minnesota, take their soybean bids higher. Okay. And that's just a function of the market needs soybeans every day. Crush, there's still margin crushing beans. You need to buy beans every day, and prices have been so subpar. And, now the shift will turn to corn harvest, both at the elevator and the farmer level. So, there isn't going to be a lot of focus on delivering soybeans to town. Like this function happens every year, right? Once you turn the soybean combine off and you flip your corn combine on, everybody's focused on that, not necessarily focused on moving soybeans to town, and you get a little bump in basis. So there's just been like a few positive things here. And for the November contract in particular, it's performed a lot better than the January contract and the March contract and the May contract. And another way to say that is soybean spreads, the difference in futures months, are firmer. That means, again, the November contract is gaining faster than its counterparts down the curve, which is also a sign that the market is trying to pull beans into the pipeline because it needs to crush beans every day, and it still needs a few beans here and there on the export side of things to meet demand. So those are positive things. And we'd expect more of the same, while corn harvest really, really ramps up and the, things dry out and the folks get going and into gut slot corn harvest. And if the government stays shut down and U.S. beans stay cheap, we would expect to see some, quiet export demand too, just because, again, they can do it without visibility because the government can't report on it. So some constructive things here in the soybean market, which we'll take it. I mean, beans from a chart perspective are right back to flirting with the 100 and 200 day moving average on the NOV 2025 contract, which again is, a strong technical chart pattern sign for the contract. And, it's closed at or above the 20-day moving average too, which is good for the short term as well. And some good things to talk about here finally about beans. It feels like it's been doom and gloom the last few weeks.
Let's talk about that point you made, the government not being able to send out reports right now because it is shut down. The USDA is not putting out weekly updates or harvest updates as well. How does this emphasize or change how the trade looks at the harvest as a whole? Are we seeing a more reliance on the independent side of reporting? And what is the trustworthy level of that in comparison to just the traditional USDA reports?
Well, the important thing to understand here is most of our markets now are driven by algorithms. Yes, there are people out there clicking buttons too, but most of our trade is driven by algorithms, and algorithms need data to function. And when they don't have data confirmed by the USDA, which is, across the globe considered to be the most, even though, some farmers might disagree and I might disagree at times, USDA data is the gospel across the globe. It's considered the most trustworthy source of information. And when you don't have that data to input into your algorithms, you're left with speculation. And speculation is volatile. And so, like we've written about it since the government shut down, and we'll continue to, pound the sand, like the best tool a grower can use, if you, put your grower glasses on for a second during volatile times, or offer contracts, especially as they have beans they might have put in open storage right at the elevator, or they might, still be on their 10 or 15 or 20 free days or whatever, if they're harvesting in central Iowa, that they get at the elevator to make a decision with those bushels. You might as well throw an offer contract in there. If cash prices are, at the elevator today anyway, probably 70 under, which, a cash price would be, we'll just call futures 1030 minus 70, 960, throw a $10 offer in there. If we get the right, volatility out of this market, a 40-cent bump in soybeans is not out of the question at all. And I think if you would have asked them before harvest if they would sell $10 cash beans, they'd say yes. So, that's one thing the grower can do, and one advantage of the, maybe the government being shut down, more volatility, more speculation, less confirmed information, better chances of drastic price movements. Now, does that also mean the market could go down hard anytime? Yes. But again, when it comes to soybeans, because it's not soybean harvest anymore, the chances of that are unlikely until we finish up with corn harvest and people do some figuring and decide, when and where they need to move beans. But again, our biggest point with the government shutdown is lack of visibility brings volatility, and that can be an opportunity. And again, from the grower's perspective, put offer contracts out there. You never know what can happen, especially like in the overnight trade.
Reese, as we look forward ahead then, what's the top priority for you as you take a look at the market trends? What are you watching for?
What am I watching for? That's a great question. Well, not to dive into the weeds, but another thing with the lack of visibility into export sales and flash sales and whatnot, the greatest tool a trader in the Gulf of Mexico trading export soybeans and export corn can use to try and incentivize corn and beans into the export pipeline are spreads. So again, going back to spreads, the difference in contract futures months, right? So for an example, in November soybeans versus January soybeans. November at this recording is at 1028. 2025 futures 1028, and January 2026 futures are at 1043. That spread is 15 cents. Okay, that spread in the last couple days it's really jumped. Is up almost 5 cents a bushel. And that doesn't sound like much, okay? But as spreads are concerned, that's a huge move. Like if you could see this chart, the last time, in 3 days of trading, it's back up to levels we haven't seen since July when we didn't know what the crop was going to look like. Okay, that's a massive rally in spreads. And so what I'm going to be watching for in the next couple of weeks is how do these corn and soybean spreads nearby and specifically, so November versus January and December versus March, how are they going to react? If they keep getting firmer and firmer and firmer, that's a sign that A, the crop's not there, or B, demand is outpacing the amount of bushels flowing to town. And so again, without the visibility of the government, watching these spreads is going to be a great indicator of, is the market getting enough corn and beans every day to satisfy demand? Right now, a 4.5, 5 cent move in soybean spread, like I wish you could see this chart. It's awesome. That tells me market needs beans. Even though the yield's there and China's not there, great. Soybean crushers still need beans. There's still some value there. And, that's why soybean prices have been supported here. So that's what we'll be watching for. How do these spreads react? And, once corn harvest picks up in particular, the corn spreads have been firm also this week here, kind of as harvest got delayed and we've seen some export demand in the corn market, which we know was going to happen, which is a good thing too. As harvest gets going, how are the corn spreads going to react? They've been firmer. Are they going to go down because, oh man, there's this gluttony of corn rushing towards the market? Or is the yield not there and the farmer's going to tuck every nook and cranny full of corn if they already sold their beans? And spreads are going to have to do some work and keep firming to try to get corn into the pipeline. Those are going to be, futures go up and down and, are influenced by so many things, but cash markets, like what the local basis is and how these spreads interact, they're telling the real story. If corn spreads keep going up, that means the yield's not there. We know there's corn demand, both from ethanol and export demand. So we'll be watching those corn spreads pretty closely.
Reese may not have been able to see some of those spreads at the moment, but I know on your guys' emails you sometimes include images of things. Maybe that might be something in the future as you continue to watch for that. In the description of this podcast, we're going to have a link to a month free trial with the Ground Level Dispatch. How would folks go about that, and what would they get out of clicking on that link and trying it out?
Yeah, you bet. And, to that point, we've pretty much solely focused on those corn spreads and bean spreads here this week as far as the images that we throw out there on commentary. But yeah, click the link. We send out grain bullets once every morning and once every evening. And then on the weekends, we try to do longer formed editorials on all sorts of interesting stuff. So try to keep it short, sweet, to the point, talk about the things we talked about today, why it matters, stuff you may not be thinking about, and try to add as much value as we can.
Again, in the link of the description of this podcast, you can check out a month free trial of the Ground Level Dispatch. With them is Reese Drenth joining us on Farm Your Daily. Thank you so much for your time today, Reese.
No problem.
This is Farm Your Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I'm your host, David Geiger, and I'll be back again tomorrow, everybody.